If you're tired of living from paycheck to paycheck and you want to have a secure financial future, the answer: invest in stocks. In this video, I'm going to tell you why and show you how. Hello, I'm Michael Robinson, host of the Michael S. Robinson Show, right here on Microbin Radio. I'm also an author of the book 100 Pennies, an entrepreneur with over 3 decades of experience running successful companies. On my shows, I share with you knowledge of entrepreneurship, career management, investment strategies, and all designed to empower you to make better choices in your life moving forward. Please don't forget to subscribe to my channel by clicking that bell to be notified of upcoming shows and videos that will bring you amazing content. Also, don't forget, give me a thumbs up if you like what we're saying, and comments and questions are always welcomed. On today's show, we're going to be talking about investments, in particular stock investments, and why you should consider investing in the stock market with very little money in a diverse portfolio of stocks and other things, but stocks certainly is one of the top interest earners. All right, let's begin. So most people live from paycheck to paycheck with very little wiggle room for mistakes, and certainly no blankets to fall back on when there is a crisis. The reality is that life is hard, especially during COVID-19 and the loss of jobs and very little money coming in from unemployment insurance. And some people have savings accounts, and savings accounts are great. CDs are great. Money markets are great because your money is secure in those accounts. In fact, they're backed by the FDIC. But the downside is that you earn very little interest on your money. So, in other words, you're seeing very little gains on whatever money you put into that account. In fact, I just checked the markets this morning, and the interest rate on savings account, traditional savings account, the highest interest rate was 0.9%. I checked a 4-month CD. The highest interest rate was 0.30% for 4 months. And money markets fall in line with that as well. So what you're seeing is that if you have $1,000 in a savings account and you're making 0.9% interest on that, you're making $9 a year, which adds up to like 75 cents per month. You're seeing very little gain. However, follow me carefully. If you took $100 out of your savings account and you put that in the stock market, there are stocks that range from low price points to high price points, and you don't have to invest in the high-end stocks. Certainly you can get something for $2.50 per share. So let's say you found a stock that was $2.50 per share. You did your research, which I'll talk to you about in future. Don't worry about all of these details. You see the trend lines, you see that it's upwardly mobile, you see the potential for the stock to expand and grow is good. The market conditions are right, and all signs are a go for this stock. It's $2.50. You buy 40 shares with $100. So 40 shares, $2.50, $100 you've spent. You put the money into the market at the right time, and at the right time you sell those shares. And the right time could be as little as 1 day, 2 days, 1 week, 2 weeks. But what I have seen, if the strategy is right and you put the money in on day 1, by day 2, based on timing, you can sell your stock when that stock hits a 10% return on your investment. And it happens really quickly sometimes it happens very slowly. It all depends on the volatility of the stock market. We all know the stock market is volatile, and that's what makes it risky, and that's what makes it scary. But gone are the days when you had to go through traditional traders and have to have a certain amount of money in order to trade in stocks. There are all kinds of different platforms that are out there, all with the same basic goal to get you to invest your money in the stock market with no commissions, no brokerage fees. The only thing you're paying is usually a small monthly fee of maybe $5 or something like that. So the bottom line is we're going to talk about these platforms. We're going to talk about the strategy of investing. We're going to talk about how you should go about approaching this phenomena. I'm calling it a phenomena because for some of you, it's a scary proposition, but it doesn't have to be because everyone is doing it and that's how they make their money. So why shouldn't you? Why should you keep your $1,000 in a savings account? Take $100 out or $200 of that money and play with it, and you'll see the returns in a very short period of time. As an entrepreneur, we invest in our businesses because that's where we see the potential of our income coming from or our returns. But not everyone is an entrepreneur and everyone doesn't want to own a business. Everyone wants to have financial security. So the stock market is certainly one of those options that many entrepreneurs have actually taken. But diversification is a key factor in investing. And I never believe you should put all of your eggs in one basket. So whereas I mentioned the $1,000 in your savings account and you think, oh, let me take all of it and put it in the stock market, I'll never advise against that. But certainly taking a portion of it, a portion that you can miss for a little bit and put into the stock market can really earn quite a bit of money for you. And I'll show you what I mean by that. Remember that $100 that I talked about? You put into this investment, this particular stock that was $2.40, actually $2.50, and you bought 40 shares. Well, over 2 days, that stock went up by 10%. You gained 25 cents per share on that stock in 2 days. And this is what happens in the stock market. This isn't a fabrication of sorts. This is how the stock market works. You've gained 25 cents in 2 or 3 days. Now is the time to sell because guess what? You have earned $10 in 2 or 3 days. Remember, I told you if you have $1,000 in your savings account, you're making $9 per year. Now you've made $10 in 2 days with $100, a fraction of that $1,000. So if you were to take that $10, you sold the stock, you kept that $110 in the stock market and reinvest it in a new stock or even diversify your portfolio by 2 different stocks. Think about the potential gains you can get moving forward. You see what I'm talking about when I say your money can work for you exponentially, but it requires a strategy. It requires a plan. It requires a little bit of learning and it requires patience. Timing, knowing when to go in and knowing when to exit. And we'll talk about all of those things moving forward. So the first thing we have to do to begin is to open a brokerage account with one of the platforms. And I'll tell you a little bit about the platforms that I've worked with. I've worked with Robinhood, I've worked with TD Ameritrade, and I've worked with Webull. Now, Robinhood is the simplest, easiest platform to work because the information is right there. It's easy to navigate and it's easy to access your data in a very quick, short period of time. TD Ameritrade is a lot more sophisticated in terms of its platform. It has an application called Think or Swim. It's a very sophisticated platform with a lot of great tools that helps investors make great decisions. And what I mean by tools is that tools are basically information that you will use to decide when to buy or when to sell, or whether a stock is a good investment for you or not. So the tools is basically information, and it's also stuff like graphs and profit and loss and earnings per share and what news is happening with that particular stock. Because remember, everything affects the stock market, right? Everything that's happening inside of the company and outside of the company. So you want to be on top of everything because remember, the stock can go up or down based on quite simple nuances that are happening in the community, in the economy, or in the company. So that's something to keep in mind. So once again, TD Ameritrade is good. It is excellent. But Robinhood is probably a simpler platform to navigate, and it has something called paper trading, which I'm going to talk about later, which can give you the experience of trading without using your own money. So once you choose the right platform for you that you're comfortable with, you want to create a brokerage account. It's going to ask you for your social security number. It's going to ask you for, how much money you make per year and, what sort of job you have. But it's a basic brokerage account that is designed to ensure that you are a legitimate person and that you are an American citizen and that you are eligible to trade in the stock market, or you're an American resident at least. So once you have secured your brokerage account, the next thing you need to do is to learn the platform, because every platform has its own bells and whistles. So what TD Ameritrade has, it's different from what Robinhood or Webull has. So learn how to navigate the basic components of that platform. And you don't have to deposit any money when you open a brokerage account. You can really open the account and put the money in at a future date. So this allows you to not only access the account, but learn how the platform works, learn how to navigate things, learn where things are, because sometimes finding information can be challenging, as it was for me when I first started. So open the account, learn the platform. The next thing I want to tell you to do is to start using paper trades. Now, paper trades are wonderful. It allows you to invest or pretend you're investing in the stock market without using your money. So you can see what the volatility of a stock is, what a trend might be, and why the stock is trending in that direction without actually spending any of your money. And it's fantastic for newbies and freshmen who really are unsure of how to pursue this. Now, with paper trades, you basically can invest in as many stocks as you wish. You can look at stocks that are in your potential price range, because remember, if you have $100 that you're investing, then you're limited to certain price points in stocks, right? For example, maybe stocks are $3 or $4, you might only be able to buy 20 shares or 15 shares. So the amount of shares you purchase depends on the price point of the stock and the amount of money you have available to trade. Now, the other thing that's available on most platforms is something called cash or margin. The margin is interesting. It's kind of like a loan you get from the platform to match the cash you have. So if you're trading $100, you might be able to get a margin of $100. So therefore, you now have $200. But remember, $100 isn't yours. The next thing you want to do is identify a stock that looks attractive to you and get some advice. There are people out there dying to give you their information or their insider's tip on what's happening in a stock or why they think a stock is potentially a good investment. So listen to them, especially if it's somebody who has a proven track record, right, of providing good information. Follow them and let them guide you, especially for the first time. What I do, however, is that I've learned what's called trend lines. I've learned how to time the market based on what's happening in the economy. Sometimes I hit the target 100%, sometimes I hit the target 75%, but that's the risk you take. But however, that same money I'm talking about, if I had it in a savings account or a money market account, I would never make the kind of interest or the returns that I'm getting in the stock market. So it's worth it. The volatility of the stock market is worth the risk that you take when you invest in stocks. And usually when you buy a stock, and even if it goes down, it will come back up again at some point in time. So just be patient. Don't panic sell nor panic buy anything. Be thoughtful about everything. Think about this as an objective investment, right? The next thing you want to do is transfer your money from your bank account to the brokerage platform. So it's very easy to do. All you have to do is follow the instructions. Very, very simple. On the platform, it allows you to link into your bank account and transfer the money. The money should be instantly available in your account. Some of them take 5 days to be available, but they allow you to use the money even though it's not actively available. So once you've transferred your money over to your account, now it's time to decide if this is the stock you're going to buy, how many shares you're going to purchase, and what price you want to pay for them. So for example, remember that $2.50 share that I mentioned earlier? That could be trading at $2.65. But you can set what's called a limit order on your purchase to limit the price. Because remember, if you look at the stock market, the price of a share is going up and down, especially during trading hours. Now, there's a good time to buy and there's a good time to sell. And we'll talk about the timing later. But right now, we're just talking about the process of just placing a trade. So once you've decided that this is the stock you want to purchase, then place the order with a limit on that share. So if the stock is trading at, say, $2.65, you might want to put a price point in at $2.50. So when it hits that price point, then the order is triggered and it goes through. Now, you don't want to put a price point that is too far away from the market value because chances are it may not hit that target. So for example, if it's $2.65 and you put a price point in for $2, it may not drop that low and therefore your stock may not go through. And you don't want to miss the opportunity on buying that stock, especially if it's a good investment and all signs look positive for it. So setting the limit order is a good thing, and making sure that it's a little below what the market price is gives you a leg up in gaining a few dollars on that investment. And once you've done that, well, sit back, relax, and wait for the right timing at which you will sell that stock. So on today's show, we talked about strategically how to place orders and why stocks are good versus just keeping all of your money in a savings account. I am going to give you the tips that you need to make the best choices when thinking of investing moving forward, how to look at the market, how to time the market, how to figure out when is the right time to buy, when is the right time to sell. This is just an overview of why you should consider investing in stocks versus having all of your money in a savings account. So don't forget to click the subscribe button for upcoming shows and give me a thumbs up if you like what we're saying, and certainly questions and comments are always welcomed. I'm Michael Robinson. Remember, this is your time. Use it wisely.